All right, hello everybody. Welcome to another video. In this video, we're going to go over us backtesting the AM reversal setup following an A+ checklist with very simple steps to abide by to put yourself in the best position to succeed with this model. I'm going to be picking 3 of these A+ setups and show you this checklist and how it follows. So here's the A+ checklist. AM reversal. So we're going to number this in the following steps. So number 1, what are you looking for at this point? We're going to focus on price. Obviously, we know time is in the AM session, New York AM session. So for step number 1, what do you want? We are going to look for the drawn liquidity. You want clear objectives to either the upside or the downside to be there for price to gravitate towards. So if that means on the higher time frame you have this bias, these draws that price will gravitate towards, or on the lower time frame you have your clear objectives, there has to be something to aim at that is clear that price should or is likely to draw towards. If that is there, step 1 is valid. And I'll get into that, finding when it is valid. Number 2, off that point, what do you look for next? You want to see a 50-minute sweep of liquidity. So you want to see price either sweep buy side or sell side and form this setup in the direction of that drawn liquidity. So whether that's a significant high or low, that's what you're looking for the next step of this setup. Then number 3 is optional. It adds confluence, and I'm going to include it because it is important, but it's not necessary. A 50-minute imbalance. So if we sweep sell side liquidity and you have a 50-minute bullish fair value gap underneath it, if price sweeps liquidity and taps into it and begins to reverse, that adds confluence to the setup. Vice versa, if it sweeps buy side liquidity and there's a bearish 50-minute fair value gap on top of it, if price taps into that while sweeping buy side liquidity, it adds confluence to the setup. Number 4, what do you want to look for after that? You want to look for price to reverse on the lower time frame. You want to see that reversal, and then you want to see a break of structure for price to break through a minor swing low, minor swing high, depending on if you're going long or short, or if you see a change in the state of delivery instead of a break of structure, that is valid as well. Number 5, what you're looking for is for price to reverse past, we'll say reverse back past liquidity swept, sort of to like displacing past the liquidity it swept. Now, what do I mean by that? So let's say price swept buy side liquidity. I'm trying to make it as simple as possible for you guys to understand. That's why I used these simple words. You want to see price, if it sweeps and goes through to it and through buy side liquidity, you want to see price reverse and come back, displace back past the buy side liquidity it swept. Now, what do I mean by that? Here, let me just give you an example right here. Let's say this is buy side right here, buy side liquidity. If price comes like this, sweeps it, you want to see price form its setup when it comes back past. Then form the setup somewhere here and then come for this move here. You don't want to catch the entry, let's say right here. You want to see price come back past below it and then form its setup. That is ideal for this A+ setup. Next, premium/discount of dealing range. If you don't know what a dealing range is, I have a video that I posted previously about it. You can go check that out. I go into all the details of a dealing range, what it is, how to utilize it to maximize your results. It's extremely effective. It allows you to measure exactly where you are located in terms of the move in this range. And I will get into how you can utilize that to the best of your abilities. And last is PD array entry, whether it's a fair value gap, breaker, inverse gap, whatever your preference is. I'll typically look for fair value gaps and breakers, but they're all valid. And so when you get all of these matching and all of these are valid and visible in the charts, you will then be able to enter that A+ AM reversal setup. So without further ado, I'm going to get into now the A+ examples of this model in action. All right, so I'm going to keep this checklist close by to continue to refer to. So let's go to the lower time frame before we look for that 50-minute sweep. Let's follow in order of steps 1 to 7. Number 1, do we have clear objectives to the downside? Well, if you look on the 5-minute, the highs that have been generated have been taken here. The damage has been done to the upside. If you look to the downside, we have so many lows that were generated that were not swept. Look at all of these lows. Look at all this liquidity that price can gravitate towards. Price has damage to do to the downside. So we do have clear draws to the downside that you can take, clear objectives that you can look for. So yes, there are draws for price to gravitate towards to the downside. Number 2, we do get a 15-minute sweep of liquidity right here. Price sweeps this 50-minute high, this buy side liquidity right here. So you get that sweep right there, visible. That is a valid sweep of liquidity. So steps 1 and 2 are there. We do not have a 50-minute imbalance, but like I said, that's optional, so it's not absolutely necessary. So steps 1 and 2 are met. That's good. We will then go to look for the following steps. Now I'm going to mark out the dealing range. This is the dealing range. Why is this low to this high important? This low swept liquidity right here. This high swept liquidity right here. That is the dealing range. And so this is what you use to measure and separate the premium upper half versus the discount. Optimal shorts will occur in the premium. Optimal longs will occur in the discount. So now that that is completed, we can utilize this to measure. So next I'm looking for either for price to reverse and then break structure, or if a change in the state of delivery occurs, that is valid as well. Price is beginning to reverse, no clear, nothing just yet, and we do get this break of structure right here. Price breaks through this minor swing low. This is a swing low right here. Price breaks through it with that reversal, and it's back past the liquidity, the buy side that it swept right here. So steps 1, 2, 3, 1, 2, 4, 5, and 6 here are met. We are in the premium of this dealing range. We're still in that upper half. And price forms the fair value gap to enter upon. So now you have steps 1 to 7 all here with clear draws to the downside that price can gravitate towards. There are clear draws here for price to go. You have equal lows right here that you can utilize to target. Equal lows right there. Or you can target the opposing end of the dealing range. So we'll remove that. What I'll do is I will put this box right here. So there we are, like that. This is the premium of the dealing range. And as you can see, we are still in it. This is the premium of that dealing range. We're in it. So this is valid. So what I would do is enter off of this retest of this gap and target the equal lows. You have those that you can target, and you have these lows as well that can be targeted. So clear objectives to the downside that I would utilize to target. So right here we have sell side right there. I'll move this checklist to the left. And so this is a valid trade to take. 1.8 to 1R. Pretty decent. And so we enter off there. Clear entry here off the retest. Midpoint respected. Inverse this gap here. So I like how price is distributing, and we get that clean move to that sell side here with steps 1 to 7 all met for this A+ checklist in the AM session for this AM reversal model. So there is the first example of this model in action. All right, so here is yet another example of this AM reversal setup in action following this A+ checklist. And so let's get straight into it. Step 1. Is there any clear objectives here? Price swept sell side right here in this AM session. Do we have objectives to the upside for a potential trade? Well, we look and we say, okay, from this point, we have this high here, 2, 3, 4, 5, 6 highs there. Clear objectives to the upside that price can gravitate towards. I mean, if you look on the lower time frame, you have this high here, equal highs there, high here, high here, high here, high here, all generated and left untouched. So yes, we do have objectives to the upside for price to gravitate towards. So this is what makes this trade still valid through step 1. I'm going to form the potential targets for price. We have that there. We have that there. So there are targets at play, objectives for price to gravitate towards. Do we get a 15-minute sweep of liquidity? Now that's what I want to look for. We have this low here that formed and price came and swept this low. So yes, we have a sweep of sell side right here. We do. So step 2 is complete in that AM session. What else do we have? We do have a bullish imbalance on the 15-minute that has been respected. Right now, it has been respected this whole time. So option 3 is valid there. We do have step 3 there. Now, let's form the dealing range. Where's the last high that swept liquidity on the 15-minute? Right here. This high swept this one right there. No high swept liquidity here yet. As you can see, all these highs have been left behind. This low swept liquidity right here. So this is the dealing range. Any entry under here is in a discount. So we do have a wide range from this point. This is a good example to bring. So we do have a lot of room for an entry in a discount of this dealing range. So yes, this is valid. So then we could go to the lower time frame and look and see if we get an entry. And if we follow the rest of the steps. So, like I said, we're in this discount right here. Let me mark out what the discount consists of this dealing range. Right there, there you are. What I'm going to do is I'm going to delete that. So anything in this range right here is in a discount. So we're going to move that here. We'll move this right here. So this is the discount of dealing range. So from this point, I want to look and see, okay, now do we form any sort of entry and still follow the rest of these steps? So in that discount of dealing range, let's recap and see the rest of the steps. So clear draws, yes. Step 2, yes. Step 3, yes. Step 4, we get that sweep. Off that point, we get that reversal. Price is back above the liquidity it swept. So steps 1, 2, 3, 4, 5, 6 are met. We do get the break of structure right here. And so what I'm looking for is an entry. And we get a fair value gap formed right here. Now this is a pretty big fair value gap, but we're still in that discount of that dealing range, right? So this is valid to take. So steps 1 through 7 are all met. Now stops below the low and target that opposing buy side liquidity. You can scale out at that buy side right there, but that is what the model consists of. So to recap, step 1, we do have clear draws to the upside, 50-minute sweep of sell side, 50-minute bullish imbalance, midpoint being respected, lower time frame reversal, break of structure right here, this minor swing high. Price obviously reversed back past the sell side it swept in the discount of this dealing range. Fair value gap entry right here. There's the entry right there, targeting that buy side liquidity for around 188 points. And let's see what happens. And there we go. So when there's clear objectives, price will clearly gravitate towards the draws. Following this A+ checklist, everything is met. And so you have a very nice 2.43 to 1 R, 188 point move caught using this AM reversal model, following this A+ checklist, all in the AM session. So there is example 2 shown with a precision entry following these clear and strict rules that you can utilize to maximize your results. So there is trade example number 2 done. All right, so here's the final example of the AM reversal model in action following this A+ checklist. So number 1, what are we clearly seeing here? Price is taking lows and leaving all kinds of highs behind. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 highs all left behind. So price clearly has liquidity to the upside that has been left behind, that price can most definitely gravitate towards. So yes, there are clear objectives to the upside. On the 50-minute, do we get a sweep of liquidity? If you look left, you can see that price takes this low right here. So yes, we get a sweep of sell side right there. Sell side right there. Clear sweep right there. And if you look left of it, you can see, yes, we do have option 3 valid right there. We have a 50-minute bullish imbalance right there. 50-minute for value gap right there. So right off the bat, steps 1 to 3 are met. Very simple, very easy. Sweep of sell side, 50-minute bullish imbalance being tested with clear objectives to the upside. We have this buy side right here, very clearly marked out. We have equal highs all here, like this one right here. Equal highs. And then we have, of course, all of these highs as well. Equal highs here as well. So we do have clear objectives for price to gravitate towards. So now with that being said, steps 1 to 3 are met. Now let's form, where is the dealing range? Well, price swept liquidity right here. You don't really see a significant sweep of liquidity any point here. So we have right here all the way down to this sweep of that low right there. So this is the dealing range. We are clearly in a discount. Price clearly is in an optimal place to take longs. Right here, discount of dealing range. I'm going to remove that right there. This is the discount right here. I'll write it down, but it's a pretty big range, so we can definitely catch a move to the upside from this point. So then I go to the lower time frame, and I want to see if I get an entry. So I'm going to go to the 1 minute. Right here, I'm going to make sure that we get a setup in that direction, all while being in the discount right here. Clear buy side, sell side sweep, 50-minute bullish imbalance, clear objectives to the upside. All right, steps 1 to 3 are met. On the lower time frame, we get an internal sweep right here and a reversal from this point. So do we get a reversal? Yes. We get a change in the state of delivery right here. Price changes the state right here. That's valid. This is a breaker structure as well. We get a breaker formed right here. That is our PD array. Whoops. That's our PD array to enter off of. And we do get a fair value gap right here as well. So we have a fair value gap simultaneously aligned with a breaker. So let's recap this A+ checklist. Are there clear objectives to the upside? Yes. 50-minute sweep of sell side? Yes. 50-minute imbalance optional? Yes. Lower time frame reversal? Yes. Break of structure? Yes. We also have that change in the state, which is even stronger. Does it reverse back past the liquidity swept? Yep. Sell side was swept here. We're back past above it. In the discount of that dealing range? Yep. Right here. Everything here is a discount. All good there. And do we have that PD array entry? Yes, we do. And so here's our entry right there. Stop below the low. And we could target just that buy side right there. 3 to 1 R right there. Very simple, very easy. Entry off that point. Following that A+ checklist. So very clear, very simple. With more objectives to the upside, but let's just target that buy side. Off that retest right there. And price goes 128 points for a 3 to 1 R with this clear A+ checklist defined. Steps 1 through 7 are all met with those clear objectives to the upside. Now, very nice move right here, showing you guys how to use this AM reversal model with this checklist. Study this checklist, utilize it. It will put you in the best position to succeed. Now, let's look. All of these highs here that I mentioned, these objectives, do these get drawn towards? Because that's very important. Are your draws being tapped? Well, let's look. These equal highs here, equal highs here. All these highs I mentioned that price can draw towards. Let's see if price does end up drawing towards it. There's the first high tap, so yes. And there we go. So yeah, those draws that you expect price to gravitate towards, that you're looking for a setup in that movement, these are being drawn towards. So your analysis, where you expect price to go, where you think price can draw towards, the liquidity, that's what is panning out in the chart. So yes, we are seeing these movements in price. So this is showing that your analysis is correct. Where are the smooth highs? Where are the smooth lows? Where has price already done damage that it shouldn't return towards? You're finding out where price will likely gravitate towards. Then you follow the A+ checklist and find a move within that movement towards those draws on liquidity. So I hope this video was insightful. I hope you learned something. I hope this checklist is something you take with you, study it, and see for yourself just how effective it truly is. I've shown you 3 A+ examples of how you can utilize this model to put yourself in the best position to succeed. And this model shows up all the time. And so I wish you good luck, good trading, show support, comment any questions if you have any, and take care, everybody.